I think the macroeconomic environment is starting to point us out towards a number of opportunities in the hospitality side. I think that what used to be from our side more focus on the ground-up development over the last couple of years was moving towards focusing on buying dislocated assets in the market space. Dislocated assets are hotels that we identify whereby we can put some value add around them, be it from our development platform whereby we are making physical changes to the asset, be it from our operating platform that obviously helps to drive a lot of efficiencies through our day-to-day operations that we undertake in-house on the franchise brand from any of the big international brands, or be it from our active asset management that helps to make sure that we are optimizing on the assets, be it from an ESG perspective, from a kind of a loan cost perspective as well, a couple of other areas of improvement. It is certainly something that's very important to us. As I think I mentioned earlier in the conference, we've been focusing or had the advantage of focusing on ESG now for almost 10 years. We had an, I think, ESG manager on board for about the same period of time. And what we do is, as a matter of course, is that we are looking, before we acquire any asset, and kind of asking ourselves, we're running an ESG audit, and we're asking ourselves, what's the kind of ESG standard that this asset potentially could achieve, and then we're asking ourselves, depending whether we are in Asia or whether we are on a European platform, whether the standards that this asset will be able to achieve fits within the overall investment mandate that we are being given. In Asia, quite often we're working with neighbors, as this is the kind of dominant rating system for Australasian kind of activities. But then in Europe, we also have a very kind of well-established team by now. It depends the countries we were working at. If it's in the UK, quite often we're using BREEAM. But then obviously, if it's in Germany or in other parts, we can also use either neighbors ratings or any of the other kind of measure entities. And then depending on the mandate that we're having, we make sure that the asset is able to fulfill, after the repositioning of the asset, a certain level of minimum ESG requirement. It's a good question, because obviously a lot of people, I guess, in the industry are kind of wondering, because of COVID and everything else, this trust should be coming to bear. I think what we always say is there's a couple of things to just keep in mind maybe. One, certainly, yes, there is a weakening that we're currently seeing when it comes to cap rates. However, if you compare the hospitality industry, so some of the other industries, we believe that while in 2019 everything was going extremely well for all the industries, once COVID hit, nobody wanted to touch a hotel anymore. And as a result of that, there was a lot of flight to safety into other asset classes, other alternatives such as residential or logistics or data centers, life sciences, etc. And I mean, while these may all be very good asset classes, themselves, but what did happen was a significant additional compression of the cap rate, which hospitality never saw. So now, on the flip side, if you think about where we're going to be ending up, I think hospitality basically starts already from a higher level, because we're still talking about 2019 kind of valuation levels. If there is now weakening happening, let's say 25 or 50 basis points, quite often the asset can make up of that thanks to the now significantly improved trading performance that we saw, I guess, throughout the area. However, where we believe there will be opportunities coming through is among, in particular, a lot of single asset owners. I'm talking about owners that simply do not have the same bandwidth as, for example, ProInvest to bear with regards to, I guess, institutionalizing the asset class, making sure that you're driving most efficiencies, making sure that you are putting kind of the right kind of paper development kind of project to bear, making sure that the right brand is sitting on the top of the hotel, etc., etc. So I think that in that space, we currently do see a number of interesting opportunities whereby we are using an aggregation strategy in order to buy single assets and pull them together into a portfolio, making them scalable, providing them with all of the, as I mentioned, institutionalized services that come with our platform, and just hoping to improve the overall portfolio over the next 3 to 5 years.